And we are live here 11/11/2019. It is Veterans Day. And welcome to Tackle Trading's Halftime Report. We've got Coach Tim, Coach Noah, Coach Cody, and we're going to break down the markets and get you ready for the week. Noah, first off, how you doing today?
I am fantastic. Just thrilled to be here.
You know, we're all coming back from a long weekend. I know Cody was out doing a guy's trip, hunting and fishing. Was it both, Cody?
Yeah, we did all of it. It was a bachelor party for my buddy. He's getting married in January, so flew into Texas from Thursday through yesterday. And yeah, it was just anything you can think of, hunting lodge, hunting, fishing. They had ranges that rifle ranges went all the way out 400 yards, skeet shooting, pistol range, speed shooting, 2,000 acres for us to go hunt hogs on. Duck season started on Sunday. We had a lot of fun.
Dude, sounds like a blast, actually. A guy's trip, bachelor party, guns, and liquor. Probably not a good combo, Noah, from what my guess is, but I'm glad you made it back safe and had a good time, Cody.
That's like peanut butter and chocolate.
Early.
Just things that go together, right? You know, like
that's right. Early with the hunting, and then when you get back is when you start the drinking.
Yeah. All right, brother. And Noah, you and I, we were down in Las Vegas actually for the Traders Expo over the weekend. We got to meet a lot of new traders, a lot of new people that are coming into Tackle Trading's community. Coach Gino was up on stage. You actually got up there with him as well and did a presentation, and we got to meet people all weekend. It was a blast and a lot of team building and a lot of good stuff out of that weekend. We're going to be talking about that on the podcast, but let's break the markets down one step at a time. You know, obviously markets today, you know, they're down a little bit. In fact, we've got some corporate news out of Boeing, out of Alibaba, and whatnot. But really, the charts are still very bullish. Noah, give me some prep on the weekend here. Start with the S&P 500 and its chart if you can.
You bet. Well, S&P, again, it popped up, right? You know, everybody I think is aware by now. It broke out above that 3,000 level, and it came up and got right up shy of that 3,100 zone. And we're just seeing some inside consolidation. I wouldn't really call it, you know, heavy selling. It's, you know, dipped a little bit, but it's really more of an inside consolidation. If you were to break that down into a smaller time frame, we'll see a inside consolidation, kind of a symmetrical triangle type pattern building in here, where you've got higher lows at the same time you have the lower highs. I'd say, you know, neutral to bullish still. Wouldn't be surprised if we saw a bit of a correction. That wouldn't be the worst thing for the market. But at the same point in time, there's nothing to say it can't press higher. And I think that that resistance zone out there, if it breaks, you might see a little bit more running.
You know, give me a look at EWH, if you will. This is the iShares MSCI Hong Kong ETF. And one thing I always tell people is there's an ETF for everything. You know, over the weekend, some of the biggest news, in my opinion, is the conflict between protesters and the government there in Hong Kong continues to rail on, and the markets are digesting that. S&P down a little bit, but really that's because of this news here. Whether you trade this ETF or not is not important. You can use it to track news stories like that. Here we are, Noah. It did gap down almost 2% over this weekend news. Pretty troubling stuff when we just keep reading these headlines, out of Hong Kong. What was your reaction to all of that?
Well, it is interesting to watch. Really gives you pause and makes you think, especially on a day like today where you got veterans, who we appreciate so much for the freedoms we have, living in a society that's relatively stable. Watching that stuff go down, I'm kind of rooting for the protesters myself, having seen communism up close and personal. They think that they're well within their rights, and it's kind of scary when you look at those, types of riots, and there's just the general imposition of force. It always makes me wonder why we do so much business with China.
Yeah. Well, they are the number 2 economy in the world, and their growth has been incredible. So money is the answer to almost every question, whether we agree with it or not. That's why we do so much business with China. We're interconnected in so many ways. And in fact, even with the international currency systems, they now have a reserve currency over the last 10 years. I mean, in the history of our economics, that's huge news. So it's not going away anytime soon, but the volatility and the risk is not going away either. And by the way, I don't disagree with what your statement was. I just think obviously with the money involved, I mean, that's always going to make it more complex. You know what I mean?
Yeah. Well, and then from what I gather, they're making a really strong push towards cryptocurrency. I was just reading some of the headlines on their main paper talking about Bitcoin and just how viable it is. I think sounds like they're making a shift on that.
Yeah. Yeah, there's no doubt. And, as I look at the S&P 500, it's not down as much as, say, that Hong Kong ETF or the FXI, but there is some volatility in those products as well. FXI almost down 2%. So Hong Kong down, China down, S&P 500 US markets are holding up a little bit. We'll see if that can shake out. One of the stocks out of the Chinese market that we do have to talk about is Alibaba. In fact, it might be the most impressive news story from the entire day. Stock's not up today. It's down 1.4%. It recently broke out and it pulled back. Cody, they've got a sales day kind of like our Cyber Monday. And I think it's called the ones. Is that what it is? The singles day.
Singles day. That's what it is.
Singles day. That's right.
24 hours, and they started it today. And I was watching just the news this morning. I was watching. They have the counter, kind of like the debt counter, but they had on the background how many sales they did, and that thing was just rolling. And yeah, today alone, what is it currently, like 3.1 or 30 billion or something like that?
$30 billion in sales and counting before the end of the day is what I saw at Alibaba, which is incredible. I mean, that's lots more than even Amazon does on Cyber Monday.
Yeah, and that's where people think that. I actually had a conversation this weekend about that. Is that I had mentioned Alibaba, and they're like, "What's that?" And I was like, "It's Chinese Amazon." They're like, "Oh, no one's gonna switch to that." And I was like, "They're a big company, and you don't realize how much they do in sales." And they're like, "Yeah, but you're never gonna have someone be like, oh, just order it on Baba." And I was like, "Well, Baba, like Amazon is your, one consumer buying one product." I was like, "Baba, you're buying things in massive bulk all the time." So you have U.S. companies doing that, and then in China, you have them ordering people ordering single items. So when you put both of those markets together, Baba is a big company. I'm still bullish on Baba, but I'm always cautious when I have to trade it, just because that news can whip you.
So at your bachelor party, you and your Texas buddies, you're trying to educate them on the market. Is that what I just heard?
To educate them.
I like it.
So it went in this order: hunting, drinking, education, in that order.
Yes.
Oh,
no, but I have one buddy who he is an accountant. So he was more curious than anything. He was asking about it, and when I first mentioned covered call, and I was like, "Yeah, you can just rent out your stocks, get an extra 1-2% a month." He was like, "Excuse me?" I was like, "We'll talk."
Well, even with put options and call options, the basics of using an options contract in a retirement, most people are not educated on. So it's not an uncommon response, even from somebody who's financially sound, got good personal finance principles in their life. They may not know that put options you can use to insure yourself against risk, and call options you can sell to generate credits in your account. And those are two very powerful things. Back on Baba right here, Noah, breakout. And I actually think this holding candle is a really interesting candle. It's old resistance, new support in a rising upward movement. Now, I know we're pay range up, but this is on my watch list now.
Oh, this is for sure on my watch list. And the fact that I think that reset your pay range, like the fact that it popped up and that RSI got nice and high, it came right back down. That formed a pivot up there. And this is a nice little springboard setup. You got an old resistance zone. You've got a rising moving average. You have a long shadow on that candlestick and a headline that reads 38 billion in sales now, I think.
Yeah, it went from 30 to 38 since I wrote the news down this morning.
Yeah.
How fast they're selling stuff.
So that's a nice little bullish setup. And even if it just rides the momentum of the headline, I think it's a very short trip out to that all-time high, and probably just one more pay range up. I mean, really, if you were to take that, long shadow and look at the previous, cycle and the previous run before that and the previous run before that, I think, one swing could put you out towards that 195 high, no problem.
Yeah, I would agree with that. Back on the markets real quick here. We'll come back to individual stocks as we go through our report. Dow, NASDAQ, Russell as well. Noah, give me a quick look at those charts that we started with the S&P on, and round out the entire stock market, if you would.
Let's take a look at that Dow Jones. It's not quite as solid on the, it's got the breakout. Didn't move as much as the S&P. It's just hovering above that old high, and it looks like there's little shadows here. Let me zoom in on that. Those little shadows there, that's kind of got a little tiny bull pullback look to it. Like it's just a couple of days selling. The shadows keep pushing back up. I think that's got a good chance to run with the rest of the market, especially, when you can kind of look at that tiny little pullback can count as a retest of the old resistance.
That little Zoom feature you just did, is that a new thing you just got?
No, it's a program ready for this. It's a program called Zoom. You can install it, and you hit a button on your keyboard and it zooms in.
Why haven't we used that this entire time?
Well, I just remembered I had it apparently. So, it's kind of a cool little feature there. But yeah, you got that those shadows on the candlesticks, and that's I don't know. I always like the information shadows provide, especially in the context of a trade setup. A hammer style candle, long shadow. Talking about the Traders Expos, we will be here in a moment. A lot of folks were talking about things like candlesticks and shadows and patterns, and just walking around and listening to everybody show their wares and their trading strategies. And I can't tell you how many times I saw people talking about the candlesticks in the context of their system. It's important to pay attention to those things.
Well, because price action is king, and it doesn't matter what kind of trader you are, whether it's futures, Forex, options, or stock, or whatever it is you trade. I mean, you have to know price action, and the candle is just the visual representation of price action.
Yep.
If you're a brand new trader, I would focus on price action first, learn how to read a chart, and then add complexity over time. There's no doubt about that. Go ahead, Noah. NASDAQ here, breaking out, showing strength.
Switching gears. It's again showing some strength. Let me get that scale back up properly. Nice again breakout. Running out there to new highs, slowing down just a little bit of rounding action on the top, letting the moving averages catch up with it. So it's probably leading the charge out there with the S&P. Good energy. Nice strength, and again, just slowing down out here inside consolidation, which can go either way. We can see that press to new highs, or we could see a pullback, and I'd buy the dip on that no problem after a breakout. So interesting watching that. Not a lot of economic news this week to push it, but it'll be one to watch.
Yeah, I would agree with that. And then quickly at the Russell 2000, if you will, small caps, obviously they've been underperforming a little bit against the broad markets for some time. They're banging up against resistance. They did not break out like the other indices did, and we really have not had that breakout from here,
Well, yeah,
looking pretty good.
And my condors are grateful for that, quite
Agreed.
frankly. The fact that it has run up nice, it's right there near that resistance. And I was very specific when I set up my condors a while back, making sure they were out above that resistance zone. So it's just right in there. Again, a little inside consolidation. This does give that chart the kind of the reset it needs if it's going to power through that resistance zone.
Mm-hmm.
Coming up and testing it after a long run like that, it's not often you see a stock run, and then break out after it started really low.
Sure.
Usually come up, test, pull back, create that kind of cup and handle type pattern. Then you'll see a breakout.
Let's take a look at the U.S. dollar index. Economic calendar wise, there's not a lot going on this week, guys. I mean, the Great British Pound, the UK had their GDP number come out. It was very, very negative. Pound dollar cross pair we could take a peek at, but really what it comes down to is this Brexit risk, Cody, has continued to weigh on economics out of the UK. There's no question about it until we get clarity there.
We're not going to hear anything about Brexit moving forward until January.
Yep.
Even if we hear stuff, it's all just going to be speculation one way or the other.
That's right. Some international currency stuff tomorrow out of the RBNZ. There's a rate statement. U.S. dollar has the inflation report on Wednesday, the CPI, Powell testimony. But guys, really what it comes down to is the market just kind of feels like, where do we go next? And same thing with the dollar. We are 92% reported for S&P 500 earnings. We've gotten mostly through the quarter. And by the way, earnings were not great, but price reaction was fine because of the same thing we've talked about a million times, how they lower the bar and then they come in and beat it, Noah. Markets have been strong. But where's next for the dollar? I know that on the weekend newsletter, you guys had the dollar at positive 45, slightly leaning bullish. I think that's a very, very good rating. Noah, what's your read here on the dollar?
Well, I want to agree with that. And again, it's, coming off of a double bottom. It's rallied back up into what I would say is ballpark middle of the range. The old resistance zone there, again, 98 ballpark. And, you got a moving average in there. You got your what is that? I'm guessing that's my 50 period moving average.
Yep.
And it's just hanging out there, smack dab in the middle of the range after forming a multiple top and a multiple bottom. That makes me kind of neutral on that. So I'd lean more bullish, but in that ballpark, we're right on with that report.
Yeah, I would agree with that. Little W breakout there, but then it's back into all this congestion. It's kind of hard to really read this on the daily candlestick chart. I've felt like that about the dollar for a long time, by the way. I think the weeklies are much easier to kind of see this upward, kind of very casual trend to the upside. The dollar's not screaming bullish by any stretch of the imagination, and there's complexity in our economics, Cody, but it's still the best of the bad bunch, in my opinion, all year long.
Right. And off of this, like, y'all were just talking about how, the slight leaning bullish. I mean, look at that weekly. It's not raging bullish, just like you said. It's just slightly it's still a bullish pattern right there. It's neutral, leaning bullish.
Crude oil.
More than that.
Now, it's going to be interesting. Whenever I think crude oil lately, I think about that Aramco IPO. Did you know that they listed with some of the firms they're going to be pushing shares out there, and they didn't even set a price range or the number of shares they're going to sell? This whole thing feels weird. We'll talk more about Aramco, I guess, as we talk crude oil, but I'm still neutral here. Noah, what's your take?
Neutral, same. And we had some really fun conversations at the Traders Expo, the booth next to ours. I know you had a lot of conversations with those gentlemen as well. You know, they were running an oil drilling operation. They're talking about doing some horizontal drilling and fracking, and you know, they were looking for investors, and they found their investors, but they were talking about that $57 a barrel threshold. That's where the frackers can be profitable. He says down below 50, $50 a barrel, that's where everybody struggles to earn a profit in the oil industry. So $57 a barrel is a big threshold.
Yeah.
And you can look at it just testing as acting as support, acting as resistance. So, if it can break up above here, that probably leads us a little bit more bullish. But in the meantime, it's still pretty neutral. A lot of sideways consolidation and congestion. And again, 57 is a big key threshold.
There were a couple of oil experts there in that crowd, but I got to tell you, I had some of the best conversations with those commodity guys. There were two firms specifically that grabbed my attention. We'll be talking about that on the podcast today, but you're right. I mean, they know where they can make money. And even at 56, 57, I think they still can make money is what we were hearing from them.
Yeah.
And down here, we've got major support down at 52, like we have all year. But you still got resistance here, Noah. I mean, you've got a falling trend line in many different regards. You could draw a couple of them, but I don't know where it's going to bump its head up here, whether it's 60, whether it's all the way up on that gap point at 62. I kind of fade the gap point at 62 because I know it was news based on that Saudi Arabia risk, right? And it was only kind of one day. It didn't hold. What about you? When you see a gap like that and you know what the news was, do you ignore it? Do you still price it in? How do you kind of take that candle?
I think more than anything, it creates technical levels that people then refer back to. So the initial news sets the thresholds. And in this case, it filled the gap. So it kind of erased the news event itself. But then everybody looks back at the chart and the gap is just an obvious price point that draws the eyes to it. And so I think it becomes a bit of a self-fulfilling prophecy in that regard. Just like gold support and resistance, gaps have their own little world of support and resistance. And, anytime you can spot the top or the bottom of the gap, that becomes an interesting price level. Mm-hmm. So yeah. I would agree with that. And then again, the bottom of the gap could act as a support resistance level. And then the top of that price action out at 62.50 is also a nice threshold to keep an eye on.
Take a peek at natural gas here and down 5.77% here on a Monday morning. NG contract. And I might have just froze.
No, I think Noah.
It might be Noah just froze.
Noah just froze. Oh,
yeah. That's all right. We'll give it like 2 seconds here. While we're talking about oil here, Cody, are you still doing credit spreads on oil while we still have that chart up?
That I am. Actually, I was just peeking at my live count. I'm going to go ahead and open up a paper count that way if I need to take it over from Noah. But I still try to get anything I can below 50. So, yep, Noah just texted me. System crashed.
No problem.
Try to get anything I can below 50. I've been able to get a couple fills down at about 45, 46 level. So I'm getting some still to fill down there. Let me log in here. But yeah, I was literally just checking on those. I have some expiring in 4 days here. And then I already have my ones out for the next 35 days that are already starting to get set up, and those are starting to fill, and I'm putting those out. So as those ones come to start expiring, I go ahead and start putting in my orders now. So I don't necessarily try to wait till Friday when those are going to be expiring and then try to put them on, or wait till next Monday and then try to get them all filled next Monday. I've kind of realized that if I try to fill them through this week, I can get better fills than trying to get them all refilled Monday after they've all expired previous Friday.
Sure. And volatility in the commodities sector.
It takes twice as much capital to do that because I'm taking free capital to replace current capital there.
Yeah.
So it's a little bit different the way I set up to do it.
Well, and if you know how to model out that risk in the Analyze tab using like a Thinkorswim tool, you can still measure the risk against different expirations, right? Even
Yeah.
more than one product. I mean, there's a lot of different ways for you to assess risk. And if you're comfortable with that because you know what your max loss is on a move against you, then I mean, that's trading, right? And that's why we use spreads instead of naked options, particularly in these commodity-based contracts. But I really like these commodities the last couple of months. I mean, it's been a good cash flow environment as the market is kind of shaken back and forth. Crude oil, natural gas, many of them have started to create some nice credits. Now, weather sensitivity and seasonality in nat gas, as we get our charts back up here, they're going to create some volatility, and you get a little bit of a pullback here. The price percentage movement in nat gas does not shock me lately because we're starting to see an increasing ATR in that range in general, right? Bigger candlesticks. Just from a chart perspective, Cody, you got a little pullback developing here. What would have to happen for you wanting to come in and do like a bull put spread?
Actually, not much. If I get a doji down here, or actually, let me make this a box. So let me remove clear drawing set, and I want a box. So if I can get between where it is right now down to these moving averages down in here, if I can get a doji pivot move, I'm gonna start selling some spreads because I see this as that breakout pullback where it can still come down a little bit lower. I'd love for it to stay above where this high base was. That would make it a lot stronger of a signal. But if I get anything down to this moving average soup that we have down here between the 50, the 20, and the 200, if it holds that 200 and that 50 and that 20, then doji move to the upside. I'm counting that as a full out reversal. I'm looking to sell plenty of puts. I'm not going to sell as it's still on the way down though. It's catching falling knife, even though you're, legging into it.
Mm-hmm.
So
No, I'm with you.
Yeah, just give me a slight pivot, and I can sell. But when I sell, I'm going to sell probably below $2. Probably $2.90 is what I'm going to try to shoot for.
Yeah.
If I can get spreads down here when it's right there, that's going to be a good credit off the delta that we can get there.
Sure. Step system principles still apply here, though. You want to have slowing momentum,
Yes.
confirmation, something intraday to develop throughout the week. We'll come back to natural gas as we break down the markets this week. Metals markets, got to talk gold and silver. They were down for almost a week in a row. In fact, gold, 1, 2, 3, 4, 5, 6 out of 7 of the last candlesticks were red candlesticks in the gold, biggest, most important metal in the marketplace. I'm still slightly just kind of hanging in the neutral zone. I own leaps, all that kind of stuff. I'm not getting away from them. What is a little concerning is the market all the way up, dollar kind of in the middle. Gold is just doing nothing. And I think it just might be from that perspective. On the longer term charts and on the longer term analysis, I think people are neutral. What's your read, Cody?
I can see that. I mean, there's nothing about this pullback on gold that surprises me.
Yeah.
Because, man, the market and gold, they can be inverse. So whenever you actually start having these breakout looking patterns on the market, it doesn't surprise me one iota that you're seeing some money come out of gold and into some of these more aggressive sectors. That's just sector rotation, and that includes all types of assets. So money coming out of your precious metals and back into the market doesn't surprise me at all. But
Yeah.
I do agree with your longer term analysis on gold.
Well, here we are pay range down. This is not the type of entry point that is step system type of an entry.
Oh, no.
Some traders might come in and say, well, it's at an interesting price level, and 1450, I mean, it is the old resistance zone on that consolidation we had in June and July. Noah, could you be a buyer in gold right here at this price?
Yeah, welcome back.
First of all, I'm glad to be back. What did I miss? Second of all, I'm pretty sure the Chinese heard me commenting on their protests, and that's what happened. I had a hard crash just out, and when your Apple crashes, Chinese language comes up on the screen for some reason.
That's right.
Yeah, I actually like this here. I don't know if I'd be a buyer, but this would be the kind of price zone and setup that I don't mind like selling a credit spread or a naked put on if you want to own it. Because it is range down. It is an interesting price level. And I think if you back it out to a weekly chart, it's still a big old bull flag.
Mm-hmm.
So, it's a little deeper down. And so that might give some traders some pause. I bet you we could draw some Fibonacci's on there to make us want to buy it more.
Oh,
but,
we could.
I think it's an interesting price level. And at the end of the day, if it's something, it's a little below that, but hey, there you go.
Mhm.
So nope, you can't buy it till it gets down to 14.13. That's the magic number.
14.13 exactly, and then the magic math is going to kick in here. I see.
It will.
I gotcha. Yeah.
No, but you got to like the dip if you want to pick some gold up. I mean, fundamentals I don't think have changed. So
Mhm.
technically speaking, not a bad scenario.
I'm with you. Let's talk about some individual companies, then get into the sectors as we do each and every Monday morning as we prep for the markets. By the way, if you're watching,
$2 down at 1400.
say again, Cody.
You can get a good $2 fill down at 1400. Selling naked put.
I see. All right. I do like the idea of a credit spread here at gold at some level. I mean,
Just
going
because
down doing
it's a higher
naked
level.
put on futures, I'm not sure that would be my first instinct. But I do not mind maybe a spread down there.
Let's see. I got the 1405. I want 14. Let's go a 10-point spread, 120 credit with plenty of room to go. Support level right where it is already. I don't mind.
Yeah. Yeah, I'm with you. There's a lot of different ways to play those credits on these commodities lately. I mean, it's a really good opportunity in the market if you know how to trade credit spreads. I'm with you 100%. Whether it's gold, crude oil, or natural gas, they've been hot in that perspective recently. I want to talk individual companies, though. Let's move on. Boeing has some good news for the first time in a long time. They seem like they're going to get deliveries of the 737 back out on the market here soon. And they're expecting commercial service internationally in January, Noah. At some point, even in the US, I'm sure they will get those airplanes back into it. I'm still a stay away. I still have concern, but this is one of the most long-term beloved companies in the marketplace, and it pays a dividend and it's got a lot of profitability behind the company. What would have to happen for you to want to get interested in Boeing again?
Well, I was talking to a couple of pilots at the Traders Expo, and pilots make great traders because they're good at checklists and discipline and just structure. But these guys were very interested in Boeing because they thought that the date was going to be somewhere between January and March. On that for going back flying the Boeing Max there, and this candlestick today kind of confirms that. I would like to see it back out above that 390 resistance level to really kind of sell me on the bullish sentiment there. But and because you are speculating on whether or not they get those back up for sale. But yeah, talking to a pilot or two, they were talking a little about the issue, and they were very bullish on Boeing long term.
I think most people who track that just look at the fundamentals and the numbers behind it. They definitely are. I'm still very cautious with Boeing just because of all the news this year. I'm probably going to be wait and see. Let somebody else do it first. Go ahead. You jump in until I see the news and proof and a little bit better chart. It's not going to be me. I know that. So mixed opinions on Boeing there.
380? Are you
380, 390 in that ballpark? It's got to clear that zone and clear congestion to really, for me to get, really bullish on without having a reservation saying, oh, it's kind of neutral.
Well, I could have a bullish observation. I mean, I could say if it breaks out, I'm going to be bullish, but actually pulling the trigger and putting capital to risk in a Boeing position, I'm a long ways on that. I might need another quarter or two.
We were just talking about credit spreads on gold. Would you sell some credit spreads here?
No. Too much random risk. I mean, here's the thing: your volatility risk is not pricing in a gap that could happen. So what are you going to do? Get some 8% ROI credit spread on the 320 bull put and feel like you got a lot of cushion, but then some news comes out and it gaps in the money. I think there's easier money, and I've always said this: take the low hanging fruit in the market. You don't have to make the hard trade that you can't wrap your head around, and maybe somebody else can wrap their head around Boeing, Cody and Noah. Don't get me wrong. For me, it's a stay away. I don't like risk like that.
Well, I mean, risk is correlated to control, and with Boeing, there's enough potential for just unknown news event or unknown an announcement here or there that could really affect the price. It does have that randomness to it, so that would make trading it a little bit more difficult. So I agree with Tim. Not for beginners, that's for sure.
I'm with you. Apple Computer, next one. Saw some positive headlines out of Apple over the weekend. Here they are, a juggernaut. The market's kind of flat to down here today. Apple hitting a new all-time high, 261. Just an incredible performer this year, Noah. And Apple says they're going to announce an AR product by 2022. So your iPhone, your iPad, and augmented reality from Apple Computer, probably going to have a pretty good product there, Cody. Does that grab your attention at all? I know this is not the first company to talk about AR, but the size of the company and how just, revered they are when it comes to consumer products, it did get my attention. There's no doubt about it.
I want to see their 2.0 version. And every time Apple comes out with something, they're really good at innovation and being the first to market. We're not first to market on this one. So I'm really curious to see what their second edition is after they release the first one and have to fix all the bugs.
Mm-hmm.
That's my opinion. And I'm a full Apple loving person. Bought the first Apple TV and things, but I also know that the original Apple TV isn't nearly as advanced as the current Apple TV, but they're on like 6 or 7 now. So I'm more curious to see their second or third AR versus the first one.
Yeah. Noah, is Apple even a tech firm anymore, or are they a consumer product firm? I mean, where do you put them in a sector perspective? Because that's all they do is make consumer products. Obviously, it's within the line of technology, but here's another consumer product.
I do think they stay firmly in that tech sector, but then they are, for sure consumer product based as well. And I think that's a kind of a testament to their business model. They've got diversification of income, multiple streams, multiple products. That's really what you want in a fundamental juggernaut, is innovation and new products, and not having all their eggs in one basket. So the fact that you can buy those streaming products, and I'm wearing a watch that tracks my every move and that kind of stuff. Yeah, it's good stuff.
Yeah, I'm with you. A couple more companies. Qualcomm, I want to take a look at this. They were downgraded by Morgan Stanley, and it's got the entire space, of the communication sector. Cisco's down, MSI's down on this news as well. Qualcomm down 2.5%. And let's see here. QCOM.
Yeah, that's what I did, but it gave me something else.
Yeah, but this is after a big upward movement, Noah. Sometimes you read a headline like, okay, downgrade down 2.5%. It might just be because it got ahead of itself. I would welcome a pullback into any of these old resistance points, including 85. I know that violates an old pivot at 90, but give me a read on that chart, Noah. Kind of a complex one. Did
we lose him again?
No, I'm here. I'm here. Do you guys hear me okay?
There you are.
Yeah, we do. Yep. We didn't a second ago.
Yeah, it just froze for a moment. But inside candlestick, there's small doji. That's not really the follow through on a bullish signal you want to see. So after a big green candle, a tiny little inside candle like that, that can reset this to go either way. It can come back down and fill that gap after it tests that support zone. It could run. This is one where I'd have to watch it and break it down into an intraday chart to identify triggers and stops.
Yeah, it's definitely a watch list candidate for me. Extremely bullish on the earnings reaction and that blast out, but then obviously some inside candlesticks here. More companies in the news that grab my attention. WBA, they actually had a buyout offer come in. Whenever I get news like this, Noah, it instantly goes off any watch list I would have had. The pullback there was significant. Reversal characteristics, red candle, little green pivot. I would not chase here, because of the nature of the news. They had a buyout offer from KKR, which hasn't happened yet. And obviously now you've got all the volatility of an acquisition potentially in the future. Noah, do you play any M&A type strategies?
No, typically, because what I've noticed over the years is when they name that price, like we're going to buy this company out at $62.50 a share, then the price all of a sudden just stays there. Like it'll gap, it'll move, and then it just hangs out at that stated price until the merger and acquisition goes through or falls apart.
Mm-hmm.
And so I don't really find much to trade on them. If you were in the know beforehand and you got lucky, look to get out. But after the news on those, I don't expect anything out of them.
Yeah. Activision Blizzard, ATVI, recently, gaming company, a big one. They recently relaunched their World of Warcraft game. Subscriptions went up, but then they got caught in this whole controversy with Hong Kong because they didn't necessarily come out on the right side of that. And profits are down a little bit. There's some concern. That looked like a beautiful breakout developing here, Noah. Now you got to be cautious. And Cody, what is that earnings calendar date right there?
It looks like it was
happened on Friday. Is that right?
Yeah, Friday.
And even that wasn't going to be the worst one, but this candle here now, you violate the moving average. Now you're not close to a breakout. You got to move that from potentially bullish on a breakout. Noah, I'm probably neutral now. What's your read on Activision?
Well, that downward movement kind of wipes out the bullish bias I had.
Yep.
And it takes me back into a neutral bias because it was building that pressure for a breakout and, missed earnings. Like you mentioned, being on, kind of the wrong side of the China trade stuff. Wipes that out. Completely wipes out the consolidation and puts me back on completely neutral ground. Like I just don't know which way to go on that. Wouldn't really find an interesting trade here directionally.
And then Uber, last one. Then we're going to look at sectors here, guys. And by the way, if you're watching our show right now, give me a thumbs up. I mean, we're not even at 50% here, guys. We can definitely do better than that out there, Team Tackle. Give me a quick thumbs up, get the word out there, share this out there with the community. It's a free show we put on there every day to help new traders with their daily routine. Uber. Now, they just recently passed the date which you could sell if you were an insider. And one of the founders sold $500 billion worth of stock, Noah. So you wonder why it's in a downtrend, or not 500 billion, 500 million, sorry, $500 million worth of stock, 500 million worth of stock. And here we are in a downtrend just looking ugly. Not only that, the CEO came out and had comments over the Khashoggi murder in Saudi Arabia over the weekend. This company can't get out of its own way. I don't know what else to say. This chart is ugly. It broke down. You have nothing but pressure in the chart. Noah, give me a read on that chart.
Well, again, also you got to pay attention. They got those negative earnings too. So the chart wise, I mean, it's just down, 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 gap down with momentum. You got a bit of a dead cat bounce there for lack of a better term. That I don't have a lot of confidence in a recovery on this. I still look at this as a bearish breakdown setup. And, the news has been negative. The chart's been negative. The trend's been negative. And the fact that now the insiders and short sellers can have at it, I just think we see more bearishness out of it.
And do we got Cody or Noah running right now? I think Cody, you are. Is that right?
Cody's running it.
Yeah, I'm currently running it.
Cody, let's go through the sectors real quick. I'll give you the ranking and we'll kind of do some analysis as we break them down one at a time. One thing we like to do on a Monday morning is analyze the sectors as a part of preparing for the week. Let's start with XLK or any of the XLs. I don't know if you got a watch list on these or not, but we can just type them in. XLK, we had a 15-yard line. I mean, one of the most bullish sectors in the market. You guys can see that hitting a new high. XLF, financials, still 15-yard line. And XLI, I want to bring all three of these up at one time, all hitting new highs into the same pattern. So if you're looking for the strength in the market, it's technology, financials, industrials. And obviously there's individual components you can play there. Noah, when you see certain sectors like that all have the same pattern, does it tell you anything about that? Is it seasonal? Is it sector rotation? What do you read?
Well, yeah, to me, it tells me that that's how the institutions are treating it. So it could be a combination of seasonality, could be some sector rotation, but at the end of the day, if you've got similarity between the sectors and the individuals, it gives me an idea of what the institutions are doing.
Yeah.
So,
utilities and real estate, both at the 50-yard line. Now, these are defensive by nature, and they're also sensitive to interest rate policy and also treasury rates as the markets go up and down in that regard. We're moving these back to the 50. Now, the charts could even be, you could make an argument that they're more bearish than that, but I think the 50 is more just because these are defensive type products. Cody, you guys were in that scouting report meeting on the weekend. What was the logic behind the 50-yard line on these two?
I actually was not there.
Oh, you were hunting and camping.
I was out hunting.
These are dividend payers. Go to the weekly chart. I'll give you the logic. I think I know pretty well exactly what it is. Dividend payers, and they've been good performers all year long. I see long-term uptrends, no, with some short-term pressure, but these are conservative products. Do you have these as neutral right now, Noah?
Well, that and they've got a nice steady upward channel. So I'd be bullish to neutral on that. And just, you need some upward confirmation on that, but it is, conservative products, pays a dividend. Correction's not the bad thing here. It might just give a buyer an opportunity.
Some areas that still have bullish rankings on the Tackle Trading newsletter: healthcare, XLV, 30-yard marker. I'm interested in a breakout here. Now, it is not the same strength as tech, financials, and industrial. There's no doubt about it, because those guys have already broken out. You got some resistance at 96, 95 and a half, but in general, healthcare has been a strong performer this earnings season, Noah. A lot of companies came out and beat in their Q3 numbers. You can see in October, I mean, this thing went from 87 all the way to 95. Are you bullish on healthcare as well?
More and more so. We upgraded that on the report, on the newsletter this week, and I believe that kind of has a cup and handle type look to it.
Yep.
So if it can clear those highs out there at 95, you might see a little bit more of a bullish run. And again, what you do when you find a setup like this on the index is you go find the stocks in the group, that the ETF is, based on, find the leaders.
Yep. Materials 30-yard line right at the same ranking here as well. And, the materials sector has some mixed information in it. I think this is stronger than healthcare, but definitely bullish, hitting a new high almost. So I could even see that one as, if it stays strong this week, could be getting an upgrade here pretty soon. Communications XLC at the 35-yard line and bullish. Waiting on a breakout here. I mean,
we need to break out on that one.
You got a triple top. This one could easily be propelled higher into that list. And we're talking things, like Facebook and Amazon and all those types, AT&T. It's going to be an interesting one if you get that breakout at 51.87, looking strong here as well. Consumer staples, the 40-yard line. Now, in the summertime, when the markets were neutral, this was one of an XLP, if you will, here, Cody, not the XLY.
Oh, sorry. I'm
No problem.
No.
This one was a juggernaut for a long time, Noah, but the charts on things like McDonald's, which found our bearish watch list on the option report this week, they've just changed it a little bit. We've seen a rotation out of the aggression, or out of the conservative into more aggressive. This is a risk on environment. Here, XLP, consumer staple, I got to tell you, neutral at best, right? I mean,
and with the price crossing down below those moving averages, and the moving averages kind of setting up to cross over a bit, that kind of leads me neutral to slightly bearish, even though you're in the context of a really big upward trend. It's kind of a soft consolidation there, and I wouldn't be surprised if we saw a deeper correction before price rally.
XLE Energy and XLY both on the 45-yard marker. Some downgrades recently on these two. W pattern on energy. I know people are excited about the potential if it does break and run, and you had a good month of October. It did come back up off support. It found some support down there at 56. But for me, it's got to break. I've got to see a lot more out of that to start going bullish on it. Right now, I think that neutral rating is very, very appropriate. Then the last one, XLY, the consumer discretionary, 45-yard marker as well. A lot of interesting ones here, a lot of interesting ones. That Amazon chart, bring up Amazon, if you will, on this XLY, Cody. Yeah, kind of same thing, neutral. XLY is going to go the way of some of the major players there. There's no doubt about it. Back on XLY, if you will, you'll look at the same, almost similar pattern the last couple of months. Just kind of stuck there, Noah. Now, it's got a high ascending type triangle in the long-term weekly charts, but man, those triangle patterns, they're tricky to predict. A lot of, I know technicians even avoid them when they're symmetrical.
Well, yeah,
like that.
I think, prediction is a tough word to use. The consolidation tends to lead to breakout. The question is which way?
Yeah.
So, that's the occasional, opportunity for like a bi-directional, straddle type strategy, or you can do a K trade where you wait for the break up or down, and then you take action. I kind of like the K trade idea on this, where, you don't need to predict, just wait, watch, be patient. A lot of trading is just waiting and watching and being patient, right?
That's exactly right. And a lot of trading is also building a watch list and trading from it from a weekly perspective. We were at the expo last weekend. We were pretty busy traveling. In fact, I drove all day from Las Vegas back to Salt Lake City, and even just to get back up here and do some family stuff. So I was trying to play catch up, coming home from the weekend. And the very first thing I did, Noah, was go to the newsletter and go to the reports, because the tackle trading coaches, they put out such good content each and every week. I then had a watch list to operate from here on a Monday morning. And on the option report, I found some really, really good picks. I like the whole report was incredible, number one. But Cody, look at Spotify. I mean, I got to tell you, out of all the charts I went through, Spotify, SP.
Spotify, SP what?
A spot, yeah, SPOT.
Spotify.
I love that retracement for a swing trade, Noah.
It's a pretty good looking setup. I like it. It's got enough room to the target side. Pretty inside candle. I like that. That's a good looking bull pullback.
Aggressive chart, aggressive company. So there's different ways you can play that. Obviously, a swing trade setup, step system rules. It has not confirmed yet, but keep an eye on something like that. And then even on the stock report, you don't have to stick to one report or the other. You're going to use them all. I got to tell you, there were some good bulls. There were also some good bears. I really liked Wayfair W as I was looking to build some bear watch list picks here this weekend. Little breakdown on that low base. I think it's got good confirmation, good potential in that. Guys, if you're a pro member, those weekend reports, you already know the value of them, but definitely go check them out. I think there's about 40 picks between the two different reports on both stock and options for bulls and bears. And those were just a couple that grabbed my attention. Guys, good show. Enjoyed it as always. No, we got a lot going on in tackle trading this week, but each and every day we do this halftime report and just kind of come and break down the markets one step at a time. We're going to podcast today as well. Cody, if people want to sign up for our pro membership and give it a try, how do they do that?
And you know, it's very simple. The first thing, the easiest thing to do is it's the first link right down in the description right below. So just scroll down, click that link. It'll take you right to the 15-day free trial. Another way you can do it, if you want to get a little bit more personal, you can always email Mark at team@tackletrading.com. He will get you set up and answer any questions that you have right there. And of course, guys, if you like just what we put out here on YouTube and what we're doing there, then just hit that subscribe button, like, subscribe, ring the bell. It'll let you know every single time we post a new video, because we're posting like 3 to 5 videos a week on top of the halftime report. So definitely want you guys to take advantage of all the content we put out there. With that, guys, send us any questions you ever have over in our clubhouse, and we will see you tomorrow.
Very good. All right, guys, we'll see you back here tomorrow in our halftime report. Have a good one.